As you're getting started with the system, even if you've been with the system for quite a while, there's things that we can each miss and not be aware of. And I think the reason for that is because we're typically trading by ourselves. We're not communicating as much as we possibly could in either chat rooms or excuse me, different groups of people that do the same thing. So long story short, there's just a need for me to convey a bunch of different ideas to you about how you can search for different things, how you can use the system more effectively, and different ideas like that. With that in mind, one of the things or one of the reasons why we chose TradeStation was because of the excellence in the platform. There, you can talk about the strategies, you can talk about the optimization. There's many tools. With Day Trading Visual Basics, the system is very basic in nature. We designed it that way so that we could have the ability to transfer ideas, and those ideas could be implemented quite easily by 99% of the people. And so with that idea, we see things or we make decisions to create things in different ways that might not be what some would think would be the most appropriate or best way to do something. One of the ideas, or one of the things that you can implement in your in the system is we have lists for different ideas on how to search for different things. Search methods and things like this. You can go to those files and look up that information. We also obviously have the different aspects of the system, like the there are 3 gap patterns that are used to find gaps, and of course the patterns, conditions, and signals that we use in the formula that we basically use to trade. And I throw trading into 2 categories. One would be we're looking for gaps, and the other one we're looking for opportunities, be it next day up or uptrends. Oftentimes when you're looking for gaps, you can find really nice uptrends. Likewise, it can be the other way too. Because you can find 15 identical indicators. It might not have a down touch, but yet it would be a nice uptrend. So and again, the system works on amounts of evidence. Good conditions as evidence, and extras, or supporting evidence that we call it, as extras, or as evidence of a next day up or a gap up. Radar Screen, for example, has 8 master indicators that we've created. One of them is a divergent indicator, lists about a dozen different types of divergence. And keep in mind, these indicators, if you find one that you like, you can add it to your indicator that's on your computer, and you will then have the DTVB indicator, the divergence indicator, with another column on it specific only to your computer. So, you may not be aware of it, but everything within the system is pulled off of your hardware in your computer once the live platform kicks in. So that master radar screen indicator is available. There's the up touch indicator and the 6 down touch indicator, meaning that we identify, or we have 6 columns that identify all 6 down touches that can possibly occur, and those 6 that qualify as a down touch within the system. And those are listed. I mean, you get a box color alert. It's really fast. Another one is the 7 short-term trend lines. The red box is going down, the green box means the line is going up, the white text means you're above 0, and the red text means you're under 0. Tells you right where the lines are instantly, just by looking at the symbol on the radar screen. There's, like I say, there's 8 master ones. We coordinate. We combined a couple of them into when the indicators are equal from yesterday's previous close to today's close. It also tells you up-down direction. It also tells you crossover 0, crossover, cross under 0, and gives you a box color alert when that specific indicator line does that. That general indicator is really handy to have just for quick reference issues when you're looking at the different symbols that you might be looking at. And if you set up 2 or 3 monitors across your desk, you can have 50 or 75 columns of information that will be instantly at your fingertips. The one idea that you can utilize as well is to take and look at the trading time, the 6.5 hours that the market is open, and we divide that into 390 minutes. You can go out 330 minutes, which is an hour before the market closes, and you can create scans. You can do intervals on that time to generate your charts, and you can find things an hour before the market closes. And there's a few different techniques that works well with. You just need excuse me. You just need to. Once you lay out a few of those, you'll see how effective that can be and how effective that can work. In a crude way, you can even find that, though you can even use that method to find gaps by using the intervals. But the best way to find gaps is basically just to use the interbar order generation code. And that basically what you've got is, if you're in the middle of the trading day and the bar is bouncing back and forth, the price is that's the current bar. That's also identified as bar 0. And the yesterday's bar, which has closed, is identified as bar 1, and then it just keeps going back like that. The scanner picks up bar 1 during the day. If you ran a scan during the day on the daily chart, it would give you yesterday's information. But there is a intra-bar order generation code that you can use, and I've put that together on a video called Trade the Current Candle. And you can see that and understand the information from that. You can print out the information also in the documents files. That is probably the most powerful tool that we have in, here, I don't want to say the most powerful tool. I want to say the most effective tool that we have in utilizing the ability to find gaps. Because you can, if you have that code in your indicator, and it's only 7 or 8 lines of code, but they're in different locations, which I've specifically shown you how to implement them within different codes. both for the radar screen and for the scanner. In that video, trade the current candle. However, what I also want to make you aware of is the when you're dealing with searching for gaps, we used to try to, and I think this is still a good policy, we used to try to concentrate within the hour or an hour and a half before the closing bell to find our patterns that were acceptable for gaps. But you can literally do that much sooner than that, simply because oftentimes when gaps occur, the candle doesn't move very much. Especially after lunch or after noon time. And so literally, because it doesn't move, the pattern is not going to move, and so the pattern shows up many hours before the closing bell shows up. You may not want to make the trade until shortly before or closer to the closing bell, but simply because it could change, but it's easy. It's not going to change much because there's a lot of elements to determining a gap, as you well know, from the required conditions of the three patterns to the extra supporting evidence that we locate. The whole system is built as a price reversal recognition identification system. And the premise is to find strength in a movement. That's when a cycle high turns around, we want to identify the strength of that turnaround. Or if a cycle low turns around, we want to find strength in that upturn. 1 or 2, sometimes 3 out of 10 opportunities that we see, or let me say stocks that are out there, we can identify the strength in them. It's going to depend on the day. I mean, what I'm saying is 10% or 20%. I should have said out of 10. I think I said, I don't think I said that. So basically what I'm saying is 10% or 20%, sometimes maybe 30% of the time, we can tell where how the price is going to go the next day based on the indicators. We can probably tell more than that, but the point I'm trying to make is that we don't want to buy those because they don't have any strength to them. We're looking for movements with volatility, is basically what I'm saying. And as you know, when we have the throughout the videos, when I've used a general example of taking 10 indicators or patterns, and 2 of them will be a green candle, and nice green candle, 5 or 6 might be a green, small green candle, and 2 or 3 might be a red green candle. Those 2 that are nice big green candles have good conditions, or what we refer to as good conditions. And those rules of those patterns are defined in the rules, indicator rules system, indicator, and the conditions are also identified. Some types of conditions and types of supporting evidence are listed mainly in other places, but the literature is there, the information is there under the documents. And there's 4 supporting documents that you can find everything in. Everything that's been written about the system in those 4 supporting documents. Now, I don't want to get off track here because my premise is to share information, make sure you're understanding how you're using the system, And to finish that idea that I had about the 10 candles, however, the end result is when you have a pattern with good conditions, you also have a high probability trade. And when you have a high probability trade, it's a high probability in the anticipated direction that the price is going to go, and it's a high probability trade in the volatility that it's going to incur in that trade. Keep in mind, the trade that you find is going to be similar in both in identifying the direction and in identifying the volatility. The direction is not going to be difficult because the pattern, there's 23 pattern types up. I mean, you're not going to enter a pattern type up and then go the wrong way. You certainly can buy it at the wrong time because it might go down significantly before it starts going up, or whatever the case may be. So you have to use the signals with the patterns and the conditions. But as long as you're using the whole formula, you're not going to have any problem. But again, the best ability, I want to talk a little bit about the intraday order generation code, because for example, this will just give you a lot of ideas of what's going on, of how to trade, and different techniques or things to use. Power red, for example, when it crosses zero, you typically, on the day that power red crosses zero, you have a bigger candle than you've had in the last several days. Likewise, when it crosses under zero, the same thing. When you've got that code sitting inside of your indicator and you run it a couple of minutes after the open, typically, if it, let's say it gaps up 5 cents or 10 cents, when it does that, typically the indicator line, if it's going to cross over zero on that day, it will have crossed in the gap up. So literally a minute after the open, it'll show a crossover. And you can find those in the radar screen, the equal to, up, down, and crossover indicator, that master indicator that I'm talking about. But you can find it in scans with that intrabar order generation code. And I love the scanner. It's my favorite tool. And there are times when the radar screen works as effective or more effective depending on how you're trading at that particular point in the day, or because some people will make 10 trades in a day, so they're constantly looking after the open or several hours after the open. So there's different techniques to search for different things. But the power red, you're going to know right away it's going to cross zero, and if it's only gone up 10 or 20 cents on a $50 stock, you can get into that, and who knows, it might climb $1 for the day or several dollars. And that's the idea that I'm trying to convey, because there's a lot of things that we know that when they start out or when they do something, they can generate a strong movement. You can use something as simple as a stock that gaps up a little. It's normally going to go down before it goes back up. Not always. Sometimes you can get a flat bottom green candle. But the point that I'm trying to convey here is that you can find those simply by having your 7 short-term trend line master indicator open. Because if it gaps up a little bit, you can look at your gap column to see what the opening gap was, and so you instantly know what that is. And you can look at, and you've got the shares column there that determines the number of shares that you can buy when you pull the trigger based on whatever dollar amount you've stipulated in that indicator. I think you've heard me before. I leave mine set right around $10,000, and I'll average the shares above or under that a little bit. Entering $10,000 worth of shares each time I pull the trigger. So how you trade specifically and the general rules that you use in your trading are up to you. Everybody has their own risk level, and as a result, they do things according to that risk. But one of the great things about the system is that it increases your knowledge, it increases your feeling of independence, and much more important is that it increases your confidence. So be aware of the ability to trade the current candle. There's just a lot of ways that will open things up for you in making quick trades for the day.